everyone, it's Beth Sager with Alex Local, and I'm very excited about today's conversation. So I'm sitting here with Anu Rames from Sustainability Investment Partners.
Sustainable Investment Partners.
Oh, Sustainable Investment Partners, not sustainability. Sustainable Investment Partners. So we met at a Chamber of Commerce women's thing several years ago now.
Yeah, 2 years ago when I was starting the process.
Right.
Yeah.
Right. And now, so when we met, you were starting your own funds.
Yep. And it was.
Yeah. So how is it? How's it going?
No. So first of all, thank you so much, Beth, for doing this. It's incredible that you are kind of like trying to bring up local small businesses. Really appreciate it. And we met 2 years ago. That was the time I was thinking about leaving the firm that I was at, and I was like, I need to do something because. So if I kind of like step back and look at my life, so I went to Babson to do my MBA in entrepreneurship.
Okay.
So I went in thinking, okay, I'm going to be an entrepreneur.
Right.
In what I wasn't sure, but I was like, I need to do my own thing. And after Babson, I joined a startup hedge fund.
Okay.
So somehow in Babson, I got into finance. I fell in love with finance, and I went into a startup hedge fund. Typical long, short, 130-30 type of. And Beth, when we met, you mentioned your background in hedge funds before.
Right. Yeah. A long time ago.
So from there, I moved on to several institutional investment shops, Essex Investment, Liberty Mutual Investments, and at Liberty, I was part of the 401k investment committee. So I did a lot of asset allocation. And from there, BNP Paribas Asset Management and another shop in Boston that was focused on sustainability. So Boston Trust Walden. So after going through, you get, at some point you get to an age where you're like, I really, why am I doing this? Mm-hmm. And, is this what I really want? Is there a way for me to craft or create a path for myself? So everyone said, don't do it.
Really?
The road is littered, literally, with graveyards of people who tried it. So, but I was like, you know what? I'm not I'm going to take it slow and steady. I know the risk that I'm taking, and I'm going to give myself a chance, because the last thing I want is to kind of turn back when I'm and think, why didn't I do it? Because that's the one thing I wanted to do.
Right.
And so, I was like, okay, I'm going to go on my own. And it's interesting. So one of the first things that you asked me, and this is even before I registered, okay? You asked me, do you have any clients? Because if you don't have any clients, you're just pretending to have a business. And I was like, whoa.
I didn't realize I was so rude.
No, that was incredibly honest and direct. And I appreciate it.
Oops.
No, because, when you do something on your own, it's so easy to step back and say, oh, this is the logo, this is the name, this is you can do everything you want and stay away from the fact that at the end of the day, you are the face of the firm. Mm-hmm. You need to go out and meet people, and you need to make connections, and you need to let people know how you can serve them. Mm. And that's a big transition to make, if you think about it. Because sales is not just because you're a great investor, it doesn't mean you are going to be good at having that one-on-one discussion with folks, whether it be individuals or families or 401k plans or investment committees. Selling is different than packaging something and presenting something.
Right.
So those are two different muscles, I'd say. So I was kind of okay, here I go. I am going to do it. left my job and started out. So when I started out, the initial couple of months were kind of like, back and forth on, did I do the right thing?
Right.
But then finally that one client came. Like it was the type of client that I wanted. So if you think about what I do, so I at the core, I am an investor. Mm-hmm. And when you think sustainability, it means different things to different people, right? That's the beauty of the word.
Right. So it's important what it means to you.
Yeah. To me and to the investors, to the asset owners.
Right.
So when I think about it, there are three aspects to it. The first one is financial sustainability. Mm-hmm. So if you think about it, is the firm strong enough to be around over the next 10 years or 20 or more, literally. Right. That's financial sustainability. And that matters in markets like this when there's a lot of volatility.
Right.
And the second one is, are they innovation focused? Mm-hmm. Is something changing so significantly that they are going to, that the entire business model is changing? Mm-hmm. So that's the second part. And the third part is, if you have strong viewpoints on issues, values aligned investing. Mm-hmm. So values can mean different things to different people. So for instance, if someone's really concerned about animal rights, they might say, I don't want to own pharmaceutical companies because there's a lot of testing going on animals. And then someone else might say, hey, that's the reason why diseases got eradicated. Mm-hmm. So what's values aligned for one person might not be the same as what that is for another person. Right. But it's your money, it's your decision, and you decide where you want to invest your capital. Mm-hmm. And if you have such strong views, I'll find a way to make that work for you.
Okay.
So that's, in a nutshell, what I do.
Nice.
Yeah.
All right. So it's not just one size fits all. You're very
It's customized.
That's very nice.
Yep. It's customized solutions, customized portfolios. And sometimes, if you start out with a smaller amount of capital, it might not make sense to it might not be practical. It might not be optimal to say it's all going to go this way or that. In that case, what I do is you create a base of a diversified portfolio and then have a sleeve where you can start experimenting with what you'd like to see. And as your wealth grows over time, you can move more to that sleeve. So that's kind of like a thematic sleeve where there's a way for you to have a diversified portfolio, but at the same time have a dedicated sleeve on these are the companies I like for the long term. This is the way I want to invest for the long term and the like.
So are you happy that you did it?
I'm happy that I did it. I'm really happy. I love the freedom.
Yeah. Okay.
I really like the freedom. So I outsource as much as I can, because one of the things that you learn early on is there's so much to do. And unless you outsource, especially so I am an independent registered investment advisor. I'm registered with the state of Massachusetts. And you understand that compliance is key, because that's the one thing, even if you were just sitting at home saying, or in your home office saying, I have an RIA, there's so much you have to do. Just existing as an RIA comes with so many checks and balances, which is needed because, we have all seen the movies, right? Of things that can happen.
Right. Yes. No one wants that to happen.
Yep. Right? Exactly. So that's kind of it. And I'm custodied with Charles Schwab, which means clients' assets will be held at Charles Schwab, and I will have I will be able to manage it on their behalf. Or if clients want to manage their own money, what I do is I essentially say, I can give you like an allocation to start out, and you can go and do it yourself. And down the line, if you need help or if you need changes, you can come back. But it's not going to be monitored on a daily basis.
Right.
So, so it's kind of like, a second opinion, if you will.
Right.
Like, you might have your own, actually. So here's one of the things I'd say. In times like this, when there's a lot of volatility, clients start questioning their financial advisors.
Oh, of course.
and
like somehow you had something to do with it.
Yeah, exactly. And so what I'd say is like, take a step back. Like, if you want a second opinion, I can give it.
Right.
But one of the things is, you don't know how someone else might have done. Right? And so at the end, the question really is, are you diversified enough? Do you have the optionality of not having to sell when things are down?
Right.
Because optionality is power.
Right.
So if you had great advice, if you are set up right, like if you put money in equities, you should expect it to be down 60% and be okay with it. That's the way.
That's how it goes.
That's how it goes.
Right.
If that's something, if you need down payment for a house,
right.
If you need to buy a horse, if you need to, if you need to, buy a boat, like if private school fees, like if you need to sell stocks to make payment over the next 1 to 2 years, no. So that was planning.
Right.
But if that's not you, you're in a good spot.
You're just not supposed to look, right?
Yes.
You're just not supposed to look.
You're not supposed to look.
So, I called my financial advisor like a month ago, and I said, should we go to cash? He's like, you know better than that.
Yeah.
You know it's going, whatever
Yeah.
happens, you're long term, blah, blah, blah.
Yep.
So.
Yeah. And
so here we are.
So the one thing I would say is so I started off, so I've been around for a bit, so I saw the global financial crisis. I didn't see the dot-com bust, but I experienced the stream of layoffs that happened afterwards because I started out in the telecommunications industry.
Okay.
So when I started out in 2005, 2006, as a percent of the global market cap, the US was around 46%. So what that means is if you take all the stocks in the world and if you put it on a weighing machine, what portion of that is the US? Just like a way to think about it, right?
Right.
The US was around 45%. And now it's I believe it's close to 65%.
Wow.
Yeah. So is that going to be 100%? I don't know.
Right.
So sometimes, and since the global financial crisis, the only thing you had to do was to own the S&P 500 and you'd look like a genius.
Right.
Right. Literally. When the markets went down, you can go and say, buy more.
Right.
And you'd be like, oh, look at me. I'm a genius. Right. Is that going to continue? We don't know.
Right.
It's just that that kind of makes me think, now you need to start thinking if yours is a totally US focused portfolio. Now, being a US focused portfolio doesn't mean you're 100% exposed only to the large. It's work, right? Going from 45 to 65% of the entire world is there were massive returns. There was nothing really to do in international. But now, if you want to think about that international portion on should you start considering it? That might be something I would encourage everyone to take a look at. Not to say, okay, that's going to be the next big thing, but just knowing that things have a tendency to revert to the mean, right?
Right.
And the US can't be 100% of the world.
No.
So,
no.
So is it 80%? Is it going to go from 65 to 80%? We don't know.
Right.
But we know that it's closer to 100 than it was before.
True.
So that's kind of one of the things that you keep in mind.
Interesting.
And but if you look at the S&P 500, which is S&P 500, simplistically, it's kind of the largest companies in the US, blue chip companies. a lot of their revenue comes from abroad. So you do have exposure. It's not to say it's like 100%, but like US focused, US companies really dominated the appreciation when you kind of look. And right, the top seven names.
The top seven, right.
Yeah. So will all that change? Time will tell.
Right.
But if you just take a look at the broad picture and see where we are in terms of what portion of GDP comes from different parts of the world, how are these companies positioned on a market cap basis, on a valuation basis, you kind of start thinking about diversifying a little more. So yeah, that's kind of where my head is.
Nice.
Yeah.
So how do people get in touch with you?
I have a website.
Okay.
Email actually is the best way to get in touch with me.
All right, we'll put your email in.
Yeah.
Okay.
Yeah. Email's the best way to get in touch with me. And before, I guess I actually had one quick question for you.
Yeah, sure.
So in terms of the real estate market, obviously there's a lot of questions around high mortgage rates, inventory in the market. Just given your experience in the space and given your experience in finance, you have seen a couple of cycles in the market and you have seen a few cycles on the real estate side. How are you seeing what's going on right now?
I feel so my understanding is real estate has been in a recession for 2 years. The rest of the country, everything else hasn't, but real estate, we've been in recession for 2 years. So we're really looking to get out of our recession.
Got it.
The only way we can do that is increased inventory. That's what we're hoping for. It feels like probably it's going to be another year or so before inventory comes back to pre-COVID standards. And in the meantime, there's certainly in our area, there's a lot of buyers. I mean, anything under $2.5 million just sort of rocks off the market really quickly. Anything over $3 million is slower, but it always has been slower. So I don't think that things have changed. It'll be interesting to see. One of my builders who has very high-end property, he's worried, and he's worried about the stock market.
Yes.
And I said, the people who are buying your house, they're in cash.
Yeah.
They have the cash. They're, I wouldn't worry about it.
Yeah.
And for the most part, they're not Americans. So they've got their cash somewhere else.
Yep.
So you're fine.
Got it.
You'll be fine. So on the high end, because that's who's purchasing those houses.
Yeah.
So foreigners with cash.
Got it. No, it's so interesting that you say foreigners with cash because, so my ethnicity is, I'm from India. And if I think about the demographics of my Indian friends, my Asian friends, there's a huge propensity to own real estate and cash. It's ingrained.
It appears to be.
Yes.
So it's cash. It's cash.
So
and you think about it, who wants a mortgage on a $4 million house?
Yeah.
Those payments, that's it's extraordinary money, right?
Yeah.
It's $80,000 a month.
Yep.
I mean, that's ridiculous. So you see why it's cash.
Yeah.
So yeah.
Okay.
Yeah.
Well.
Yeah, I give it another year or so though before we really sort of work our way out of this.
Okay.
And that was sort of based on, 2 months ago.
Yep.
We have no idea.
How?
No idea. Yeah. Right.
Yeah.
So
hopefully, like you said, I mean, the one thing is kids keep growing.
Right.
You need to go to school.
Right.
You need a great town.
Right.
And
true.
Yeah.
You still get divorced, you still have babies,
yes.
you still retire, right? So for all the reasons, there are, you still are selling your house.
Yeah.
So for sure.
Yeah. So it's, and when you talk about retiring, divorce, it's like when I started out, one of the questions I had was, what exactly does a financial advisor do? If you're a realtor, you're like, okay, you sell a house. To say that someone works with me on financial planning, kind of if you haven't done it, it feels kind of what exactly is going on over here? And I kind of like think about goals that people have, and like in a really funny way. So it can be like, the typical PB&J kind of goals, which is like, I've got a job, I've got my 401k, my kids' 529 plans and the like, and I need to retire.
Right.
And then, like, so around after the global financial crisis, like around 2010, a gold ETF came public. And you know how those are, right? Those, then you go to like a small luncheon, you've got the management team trying to sell the stock. And their entire spiel was, look, for every dollar invested, we have gold bullion stored in the vaults, okay? So great, that was fine. But the moment you say something like gold, like the cast of characters who comes is totally different than like a regular IPO. So then the questions were, but where is it stored?
Right.
Can, like, just given the jurisdiction that we are in, can someone reach that vault? So in which vault should it be sold? Wow. And I was like, okay, these folks are definitely different. Right. So depending on who you are, your life needs, your goals, etc., are going to be, it can be like black and white.
Right.
It's so different.
No, I agree.
So yeah, so that's, I'm here in Lexington. So if anyone wants to have a cup of coffee, talk markets, feel free to get in touch with me.
Perfect. I think that's a good start, right?
Yep. Thank you so much.
Yeah, no, thanks for coming in.
Yeah.
Appreciate it.
Thank you.